Welcome back. This is Jacob Milliken with 9M Investments, and today we wanted to give you a quick update to some of the changes that we've made in our portfolios, especially when it comes to the commodity sleeve. So one of the big changes, we actually increased our exposure or our allocation from 3% to 5% of the overall portfolio. And then we added a couple new members to what we already had within our commodity sleeves. So I'm going to jump through those and give you kind of a little bit of breakdown of each investment. So the first one, which we already had into the portfolio, is PDBC from Invesco. This is a commodities fund that's focused on future contracts. It contains oil, gold, wheat, copper, kind of all the different types of commodity futures that you can be exposed to. This one also has a options strategy wrapped around it, so the yield on this is a little bit higher than if you were just investing in commodity contracts or commodity future contracts. This fund in particular, going back to 2022 when the markets were kind of falling apart early part of the year, this was one that was actually going the other direction. A lot of that was driven by oil prices rising so much. Again, as things get crazy, oil sometimes can kind of zig when everything else is zagging, and that's one of the reasons that we want to have this in portfolio for that very moment. The next one is GLDM. This is from Spiders Gold Mini Share Trust. We're actually increasing the allocation from 0.8% to 1%. Again, much like the commodity strategy, this is a good one to have in your portfolio, especially in kind of crazy times or markets are going down or going sideways. This is kind of a good hedge to have. Also, when you think about currency depreciation, a lot of people like to have some of that gold exposure. And again, this is based on physically backed gold spot price. The newest member to the commodity structure is Bitcoin. Now, what we're investing in is not direct to Bitcoin, but through one of the new ETFs that was opened up a little bit over a month ago. The particular one we're using is from Bitwise. They've been in the industry for a long time and really focused on that industrial or the digital space. But this gives you direct exposure to the spot price of Bitcoin. Should move right with Bitcoin as it goes up and down. Now, this actually adds quite a bit of volatility, but it also gives the opportunity to make sure that we take advantage of a new piece of the market, a new piece of portfolios, and the overall growth. So taking away some of the direct exposure of having digital wallets or getting exposed or hacked or all those different things, buying this through an ETF gives clients protection, but also gives the exposure and hopefully the long-term growth within the space. Currently, we have this allocated at 1.5%. The other new entry to the commodity sleeve is Ethereum Trust. This is from Grayscale. The ticker is ETHE. Again, we're allocating 1.5%. This is the second largest digital currency out there. Ethereum is a little bit different from Bitcoin, that some of the things that Ethereum can be used for, others can use the structure of Ethereum to build out lots of different applications. So it's a very kind of unique way to approach the digital currencies. A lot of people currently are using this in smart contracts and things like this. But again, much like Bitcoin, it's highly volatile. That's why we're not increasing to a greater number. We're going to keep that kind of under control for now. But we think that as these acceptance occurs and more tools are built off Ethereum, that this really shows a great growth potential for our clients. And so, overall, again, the four main members of this portfolio sleeve is commodities, kind of your standard commodities, oil, agriculture, mining. We're going to have gold at 1%, Bitcoin and Ethereum both at 1.5%. And again, looking to provide growth potential, but also kind of that non-correlated movement to stocks and bonds. And that's really what I want from the commodity sleeve, is the ability to give the overall portfolio a way to grow in those times when, stocks and bonds may be struggling. So hope this is helpful. If you have any questions, please reach out. Thank you so much.